Hi, Mark Gordon. Tuesday, June the 14th, 2011, and taking a closer look at gold here. This is a chart going back about 9 years, looking at the bull run that gold has enjoyed since around 2000, 2001. We're now in about the 10th or 11th year of a nice big bull run here. And you can see that this uptrend is clearly intact here. Gold above $1,500 now, just riding up all trend lines and moving higher. Now this is a monthly chart, and it has not been a straight up rise, obviously, nothing is. And we did have a nasty pullback here in 2008, which took us all the way down here to this black dotted line, which is the 40-month moving average. Found support there, and that's really the only time during this move, except for the very beginning, that it's done this. Most of the time it has respected this blue line here, which is the 10-month moving average, and that is at about $1,426 here. And right now we're riding up this red line, which is the 4-month moving average, and holding pretty tight here. And zooming into this monthly chart, we can see the support we're getting here at the 4-month moving average, which is at about $1,510. And you can see for the last couple of months we have been pulling back a little bit. Nothing to be concerned about, though. Now, something I want to point out to you is the relationship of gold versus gold stocks. And you can see here that gold has really taken off, gapped up here, and in relation to the gold stock. So gold holding its ground while the gold stocks are being taken down. Now this happened before to a really very extreme extent back here in late 2008, when the markets of course had its severe sell-off. Gold held relatively stable versus the stocks, and spiked up very dramatically here. Now I am noticing a lot of strength of the gold versus the gold stocks here in the last several months. So this is something to keep an eye on. Stocks have been clearly selling off for the last 5 or 6 weeks now, and while gold has held very steady above $1,500. And looking back several years on a monthly chart of gold versus the S&P 500, we can see that gold has been holding its own and moving up for the last 4 or 5 months versus stocks. And you can see that little gap up here. So gold remaining strong and getting stronger as stocks are selling off. Wanted to call your attention to this chart here. This is the U.S. Housing Price Index, the HGX, and it peaked here at about 0.683 here in mid-2005, and it's been downhill in a big way ever since, reaching a bottom here in 2009, just before this bull market in stocks began, and it was down 91.4% from the peak in just several years. So a huge fall in relationship to gold. So when you price homes against gold, you get a huge drop. And then right now we are 89.7% off the high. So this questions the validity of all the stimulus money that's been thrown at the banks to help the housing market, all the super low interest rates and money printing and quantitative easing, and all this is really making gold go up much faster than home prices are going up. So the stimulus is an illusion. And when you price things in gold, the illusion continues. Here is the S&P 500 versus gold, and it peaked here in 2000 and has been virtually downhill ever since, reaching a low here in early 2009 before our bull market began. And when you price stocks in gold, they were off 84.5%. And right now the S&P 500, when priced in gold, is currently off 81.5% off the highs that it made almost 10 years ago. And it gets interesting when you price the US dollar versus gold. And the US dollar hit a peak here in 2001 and has been falling very rapidly, especially lately, gaining some momentum to the downside here. And we are currently off, the dollar is off 89.7% off the high made in 2001. So in 10 years, the dollar has lost 89.7% of its purchasing power versus gold. And here's a chart of the price of oil, light sweet crude, and hit a bottom here of $10.72 back here in late 1998, and ran up to a peak here of $145.78. And right now we're at about 102 in that area. So if you wonder why things like gasoline are costing a lot more, it's really because the dollar is losing its value. And so things are getting more expensive as the dollar loses value against gold.